Hello ACCB 129 students. Today we are going to go over problem 6.2a. Problem 6.2a. In your textbook it's listed on page 176 and in your workbook it starts on page 115. So it says there a completed worksheet for the warrior group is shown at the bottom of these two pages. So at the bottom of page 176 and 177 there's a completed worksheet. We learned how to complete this worksheet last chapter, but they've gone ahead and completed it for us. And then the instructions say record the balances in the ledgers, journalize the adjusting entries, and journalize and post the closing entries, and prepare a post-closing trial balance. So it's kind of a lengthy problem. So now let's look in your workbook, and remember I have tabs, you have pages. We have two general journals. One of them's for adjusting entries and the other one's for the closing entries. And then if we keep going, we have ledgers. And you'll notice we don't have ledgers for every account. So out in the real world, we would have a ledger for every single account. And for whatever reason, the author opted not to have a ledger for each account here. So let's keep looking. So we have ledgers. And then we have a post-closing trial balance. And we're going to learn how to prepare that at the very end today. So let's go back to the beginning. The very first instruction says, record balances as of December 31st in the ledger accounts. So if you'll look down at the completed worksheet, we have a column called trial balance, and that is where we are going to get our opening balances from. So our very first ledger is supplies. So we don't have cash or accounts receivable, so we have supplies. So we're going to enter the date, opening, and all the way over. And supplies has a debit balance of $6,000. And now we're going to just keep going down the list. So prepaid advertising. And again, I'm getting these off the trial balance towards the bottom of the page, not the adjusted trial balance, but the trial balance. Okay, let's look. Our next one, accumulated depreciation. It looks like we don't have any. Capital account. Looks like we have one. And it looks like 132,000. Okay, next one, drawings. Looks like has a debit balance of $8,400. Income summary. Income summary we don't use yet. It's not, well, we'll use it during closing. Fees income. Credit balance of $75,000. Now remember, when you're doing this out in Connect, it's slightly different than the process here. In these columns, you have to put zeros. So this debit, this credit, and then this debit, you have to put zeros in. And that's just how the system is set up. I wish there was a way around that, but there isn't. Salaries expense, we have that. They didn't do a very good job of putting these in a good order, in my opinion. Okay, and then utilities expense. Debit balance of $1,800. And you know, if I were doing this out on Connect, I'd do this exact same process that I'm doing right here. I know your screens are set up slightly different out on the Connect Accounting website, but it's the same process. Okay, so now we have done number one. Now it says journalize and post the adjusting entries. So we're going to go up here and we are going to do a title of adjusting entries. And then we are going to put a date. We're going to start our very first transaction. So now all we're going to do is we're going to journalize the adjustments in the adjustment column of the worksheet. Adjustments column of the worksheet. So adjustment A, our debit is to advertising expense. We just went and found the debit for adjustment A. And prepaid advertising. Now we're not going to put a posting reference in here. That is after we've posted it in the ledger is when we will put a posting reference in. After we post it to the ledger. So B is advertising. Oh, you know what? I messed up adjustment A. Adjustment A should be supplies expense. Let's go fix that. So I had the right amount, I just had the wrong accounts. And this is going to be supplies. Okay, now on to adjustment B. Advertising expense of $3,000. And prepaid advertising. Next, depreciation expense of equipment. And again, you should be following along in your workbook doing this right along with me. And the amount is $2,400. And now we're going to post to the ledgers. We learned that last chapter and we're going to do it again this chapter. So right here we're going to look at supplies expense. It is a debit. Now we're going to go find our supplies expense. And the description is adjusting. Posting reference J3 because all of our entries were made on General Journal page 3 and it was a debit. We debited supplies expense $2,400. And now we're going to take this account number and it's going to go back on the General Journal as a posting reference. So 517 goes right here. Right here, supplies. $2,400 credit adjustment. Let's go find our supplies account. Right here. This is adjusting. And our posting reference is J3 because it came from General Journal page 3. And we had a credit adjustment of $2,400. So now it's the balance in our account. Right after this transaction, the balance is we had a debit, we credited the account, and now we're going to have a debit balance of $3,600. And if you'll notice, that will match the exact same balance that is clear over on the right hand side in the balance sheet columns. That is how you know you've done this adjustment correctly, because it matches. 121. Advertising expense. And I apologize for my horrible spelling. Advertising expense, $3,000 adjustment. So now we need to go post this out to the advertising expense. J3 posting reference, and it is a debit of $3,000. And then we take this account number 526 and go and put it back in the General Journal of 526. Prepaid advertising, let's get it posted out to the ledger. It had a balance. This was an opening balance, and I forgot that. And so now we have an adjusting, and it is a credit of $3,000. So right after we make this, we had a debit, we credited the account, we have a balance of $21,000. And if you look clear over on the right hand column on our worksheet, in the balance sheet column, the balance in prepaid advertising is $21,000. Excuse me, that's how we know that we posted that correctly. Take this account number and it goes back and we post 131. Depreciation expense, $2,400. December 31st. It is adjusting, and the posting reference is J3 from General Journal, page 3, and it's a debit of $2,400, and we end up with a debit balance of $2,400. Take this account number, 523, and when you do this out in Connect, do the same process I'm doing. Go through, open the ledgers with their beginning balances, then go through and post every single transaction individually. Don't try to be sorting through balances and postings. Do it in the same process that I'm doing here. It will make your life easier. Accumulated depreciation is a credit. J3, it's a credit of $2,400, so therefore the account balance is $2,400. Okay, so now we have completed step 2 of our problem, and now we're going to go on to step 3. Oh, and this should be page 3, and it tells us that we're going to do our closing entries on page 4. Okay, so now we are going to go and close, and if you've watched the prior video, you know that we close out everything on the income statement, and then we close out draws, and everything eventually gets closed out to an income summary account. So let's start. Let's look at the accounts that are on our income statement column on our worksheet. Income statement column on our worksheet. And if you'll notice, fees income is $75,000. $75,000. And you will notice that the account has a credit balance. And we need to get it to a 0 and transfer it to our income summary account. So we are going to credit fees income of $75,000, and we're going to transfer it to, oh, and I right up here, I forgot closing entries. And we're going to close it out to an income summary account. Income summary. And $75,000. Income summary is an account that is a temporary account. We open it up during closing and then immediately close it. And now we need to close out all of the expenses, and we close those out to the income summary account, but I don't know what amount yet. So I put income summary up here, and then I will figure out what the balance is here in just a minute. If I can get Excel to cooperate. Okay, and now on our worksheet, all of our expenses in our income statement column have a debit balance. So to close them out, we credit them. We credit those expense accounts, which I know that's not its normal balance, and it's not supposed to be. We're closing them out. Advertising expense, depreciation expense, equipment, and again, they were debits on the worksheet, so now I'm crediting them to close them out. Okay, now we're going to add up all of our expenses and it's going to go right here. And the total of all those expenses is $24,000. Now we need to close out income summary. And here's how I like to do that. I like to make a T account. T accounts are my favorite. Okay, so in this very first journal entry, we made a credit entry of $75,000. And then we went over here and we made a $24,000. And so the account balance right now in this account is what? Looks like $51,000 is the balance of this account right now as we speak. But I said we need to close this account out. So if it has a credit balance, we need to debit it. We need to debit it $51,000. And we're going to close that out to our capital account. Remember, the whole point of this was to get everything into our capital account. So here is Gale Warrior Capital, 51,000. And now, if you will look on your worksheet on the net income line, the net income is $51,000. So $51,000 is our net income, and we just closed it out to capital. We have one more. We got to close draws. So on our worksheet, our draws is a debit balance of $84,000. So we need to credit it and we need to get it into our capital. And our draws are $8,400. Okay, so those are our 4 closing entry. There's always 4. They're always in the same format. They're always in the same order. So now let's look at fees income. And now we have to post these out to the ledgers. So fees income. Let's go find fees income. It had a credit, and this is opening balance, and again I forgot that, I apologize. And this is closing, and we debited it $75,000. And look, now the account balance is a 0, which is the point. We wanted to close it out so we can move it to income summary and then income summary to capital. Now we need to take, oh, I forgot this, J4. And we need to take this account number back to 401 right here. And income summary, let's go out in income summary. We're going to credit income summary. J4, we're going to credit income summary and we're going to credit it for $75,000. So now it has a credit balance of $75,000. Okay, let's look at the next one. Income summary of $24,000. Income summary of 20. Oh, I forgot my posting reference. Sorry, I got a little ahead of myself. 309. Now income summary. We're going to go debit it for $24,000. And now, right after that, it has a credit balance of $51,000. $51,000. And look, that's the same amount as our net income, which makes sense because here we closed out our income and here we closed out our expenses. So that leaves us with a credit balance of $51,000. And then we need to go through and post each one of these individually. So let's do the first one together. Supplies expense. This is a closing entry from J4, and we credited it $2,400. And now our account balance is a big fat zero, which it should be. We are doing closing. We're closing it out. And then take this 517 and it goes all the way back to here. Okay, so I'm going to pause the movie and the video, and I'm going to bring up this as a completed problem, and then we're going to work through the last one. You would keep going and do every single one of these. Post all of these out to the ledgers, and I'm going to show you completed ledgers and what they should look like, and then we'll go over how to prepare a post-closing trial balance. So I'll be back in just a moment. Okay, so now let's look and see what this looks like. This would be when after you're all done working on it, it should look like this. And I'm going to kind of scroll through there slowly, and anytime you need to pause the video, just pause the video. And this is after everything is posted to all the ledgers. Everything is completed, clear through step 3 for this problem. And look, our income summary is a 0. Remember, I told you, income summary, we open it up for 3 entries and close it. And right here it shows that. It's a 0 balance. And if your closing has been done correctly, this should be a 0. And all your fees income should be a 0, and all of your expense accounts should also be 0. We have closed them out. Okay, now let's talk about a post-closing trial balance. So now we go through and we make a list of all of the items that are not closed. Now, in real life, we go get all of those balances from the ledgers. But because the author didn't choose to do that, we have to look partially at the worksheet and partially at the ledgers. So let's start at the top. Cash. Did we close it out? No, we didn't do any adjustments. So we just take the debit balance off that balance sheet account and $92,400. And then accounts receivable, we didn't make any changes for that either. So in the balance sheet column on our worksheet, $12,000. Supplies we did make some changes to. We made some adjusting entries. So I'm going to go back and I'm going to find my supplies ledger, $3,600, which matches exactly what the balance sheet is in the balance sheet column on the worksheet. So that is what goes in our post-closing trial balance. So only permanent accounts that stay open go on our post-closing trial balance. Prepaid advertising, same thing. Let's go look at that ledger. Prepaid advertising, $21,000, which matches the worksheet. It should. Everything should match. Equipment we didn't make any changes to at all. So we just go with the equipment. Accumulated depreciation, we did make some changes to it. Accumulated depreciation ledger balance of $2,400, which if we look on our balance sheet column on our worksheet on page 177, same thing, same balance. Accounts payable. We didn't make any changes to accounts payable and there wasn't a ledger, so $12,000. Now our capital account, $174,600. $174,600. Look, $174,600. That is after we have closed out net income to capital. So we've increased our capital by net income and we've decreased it by the amount of money that the owner has taken out. And then we add these all up and it gives us a post-closing trial balance. Now, none of our income statement accounts or our expense accounts go on this post-closing trial balance because we zeroed them all out. The ledgers have a 0 balance. So fees income right here has a 0 balance, as does all of our expense accounts. And they're supposed to, because we have done closing correctly. So that is how you complete a post-closing trial balance. Good luck with the homework for Chapter 6. Remember that I have made changes to the schedule and that your Chapter 6 homework is now due on Wednesday, February 26th. Wednesday, February 26th. And be sure that you are out viewing all the information for your mini practice set and your project. And I look forward to working with you in the future.